The time has finally come. Snowflake is going public this week, and today I'm going to take a deeper look into the company to see if the hype is warranted. We'll look at the background of the company, dig into the financials, and I'll give what I feel are the reasons for and the reasons to be cautious in buying the Snowflake stock. If you've been waiting for the Snowflake IPO, this video is for you. Welcome to the Healthy, Wealthy, and Wise channel, where we talk about all of the big and not so big companies going public, whether it's by traditional IPO, a SPAC, or direct listing. For those of you new here, my name is Kevin, and I want to formally invite you to join the community. Feel free to watch the video first and maybe check out this week's episode of IPO This Week, our featured program where I cover all the companies scheduled to go public each week, and then see if this is the content you're interested in. If it is, joining is free. You just got to press that little red subscribe button. And to everyone in the community, welcome back. I know that the Snowflake IPO has been the IPO that I've gotten the most questions and comments on, so I hope you like and find this video helpful. From comments in previous videos, I know there's a lot of thoughts out there on how the stock is expected to price, so I'd love to hear your thoughts on where you think the stock will close on that first day of trading. Please let me know in the comments. As a quick reminder, I'm not a financial advisor, and while this video is meant to be informative, it should not be seen as a recommendation for you to take any action on the companies covered. You should always do your own research or consult with your own financial advisor when making any investment decision. Okay, let's get our snow shovels out and dig into this company. For some background, Snowflake is a cloud-based data warehousing company that was founded in 2012 in California with a vision of creating a data-connected world where organizations have seamless access to explore, share, and unlock the value of data. At the most basic level, its technology allows companies to store and manage data in the cloud, which we know has been a huge and important growth area for Microsoft and Amazon. The company's founders were three experts in data warehousing, with two of them coming from tech giant Oracle. And because of the founders' love of snow sports, they decided to name the company Snowflake. For 2 years, the company operated in secret until coming out to the world after appointing former Microsoft executive Bob Muglia as CEO. In that same year, 2014, is when the company first started selling their platform. So let's talk a little bit about their platform and product. The company is pioneering the data cloud, an ecosystem where Snowflake customers, partners, and data providers can break down data silos and derive value from rapidly growing data sets in secure, governed, and compliant ways. To meet that objective, their cloud-native architecture consists of three independently scalable layers across storage, compute, and cloud services. The storage layer ingests massive amounts and varieties of structured and semi-structured data to create a unified data record. The compute layer provides dedicated resources to enable users to simultaneously access common data sets for many use cases without latency. And then the cloud services layer intelligently optimizes each use case's performance requirements with no administration. This architecture is built upon three major public clouds and ones you've heard of, in Amazon Web Services or AWS, Microsoft Azure, and the Google Cloud Platform. Additionally, they run across 22 regional deployments around the world. These deployments are interconnected to create a single cloud data platform, delivering a consistent global user experience. The company has grown quickly, which is why investors have eagerly awaited news of the company filing its IPO papers since February, and then just last month they finally did when they announced that the company intended to list on the New York Stock Exchange under the ticker SNOW. And there actually had been a lot of interest for some time, as this company has raised around $1.5 billion in venture financing prior to going public. Currently, Snowflake has over 3,100 customers as of July 31st of this year, including 7 of the Fortune 10 and 146 of the Fortune 500 companies. To name some of the biggest ones, they have Capital One, Experian, Bankrate, Sony, Office Depot, DoorDash, Instacart, Adobe, DocuSign, Micron, and Dropbox. So you can see that their customer base is across many industries. Let's go back to February for a second. It was no surprise that Snowflake made its intention known that they were looking to go public this year, because just months earlier, the company named Frank Slootman CEO. Slootman is somewhat of a corporate star due to his reputation for making money on taking private companies public. As I've mentioned before in other videos, he previously served as chairman of ServiceNow, and before that, he was also successful in taking Data Domain public in 2007 before selling it for big money just 2 years later. There's also one other thing I want you to keep in mind about February, and that is when they were reported to have had their most recent fundraising round. At that time, Snowflake was valued at about $12.4 billion. Keep that number in mind because we'll come back to it in a bit. Back to our shovels, as we dig some into the financials the company released in their S-1 filing. Let's start with revenue growth. For the fiscal years ended January 31st for both 2019 and 2020, their revenue grew from $96.7 million in 2019 to $264.7 million in 2020, representing year-over-year growth of 174%, which is obviously eye-catching. And for the 6 months ended July 31st for both 2019 and 2020, revenue grew from $104 million to $242 million, representing year-over-year growth of 133%. And if you're wondering if there is even more potential for growth out there, well, there apparently is. According to IDC, the markets for analytics data management, integration platforms, business intelligence, and analytics tools, which is where Snowflake operates, will have a combined value of $56 billion by the end of 2020 and $84 billion by the end of 2023. And for an industry, the data warehouse as a service market is predicted to grow at a 29.2% compound annual rate through 2030. So there should be a lot more growth to come. In fact, according to Bloomberg Intelligence, that's because they state only 30% of data analytics is now performed in the cloud, putting Snowflake in a great position to take share from the legacy on-premise vendors. From the filing, Snowflake reported a dollar-based net revenue retention rate of 158% for the period ended July 31st, 2020. You can take this as a positive response to their platform from their current customers. And gross margins are continuing to improve as well. Again, for the fiscal years ended January 31st, 2019 and 2020, the gross margin improved from about 46% to 56%. And then for the 6 months ended July 31st for both 2019 and 2020, the gross margin grew from 49% to almost 62%. Again, nothing to complain about here. Now keep in mind that the company is still not profitable with a net loss of $178 million from the fiscal year ended January 31st, 2019, ballooning up to $348.5 million for the fiscal year ended January 31st, 2020. So while revenue is up, it's still not overcoming an overall total operating loss of $506 million for the fiscal year 2020, resulting in it not being profitable. So obviously this is the not so good news part of the financials. The operating loss can be broken down into $294 million spent on sales and marketing, $105 million on research and development, and another $107 million on general and administrative expenses. Obviously there's a big push on marketing and sales based on the numbers that Snowflake is reporting. Now when looking at the past 2 quarters, we do see that they are beginning to burn less cash, and that is something they want us to be aware of as we approach the initial public offering. Was part of that due to the pandemic slowing everything down, or maybe even a little window dressing as they ready to go public? Whatever the case, there is no question that they are looking at the IPO as an opportunity to obtain more capital so that they can continue growing exponentially while still being unprofitable. From the filing, Snowflake states they plan to use the net proceeds of the IPO for general corporate purposes, including working capital, operating expenses, and capital expenditures. The company also will have the standard 180-day lockup for pre-IPO investors and insiders. They also do not plan to offer a dividend in the foreseeable future, which is typical for most growth companies at their stage. In the amended filing that came out last week, Snowflake stated plans to raise over $2.2 billion by offering 28 million shares at a price range of $75 to $85. However, before I recorded this video on Monday, the company revised its pricing expectations upwards to a range of $100 to $110, which would bring in over $2.9 billion at the midpoint price of $105. And at that midpoint of the proposed range, Snowflake would command a fully diluted market value of $37 billion. I can't say that I'm surprised that they increased the amount of money they were looking to raise, but I thought they might have done that by selling more shares instead versus increasing the share price into the triple-digit range. Either way, at pricing, Snowflake would be the largest ever IPO of a software seller, both in terms of proceeds raised and IPO market cap. Where it became more interesting is when Snowflake first noted last week, quote, "Immediately subsequent to the closing of this offering, and subject to certain conditions of closing as described in the section titled Concurrent Private Placements, each of Salesforce Ventures LLC and Berkshire Hathaway Inc. will purchase $250 million of our Class A common stock from us in a private placement at a price per share equal to the initial public offering price," end quote. And then reading along, it said that Berkshire Hathaway had agreed to purchase over 4 million more shares of Snowflake stock in a secondary transaction at a price per share equal to the initial public offering price. So what this means is that the company plans to raise an additional $500 million from Salesforce Ventures and Warren Buffett's Berkshire Hathaway, And then with that secondary transaction, Berkshire will end up having much more than the $250 million invested from the first transaction. That was an intriguing development to the Snowflake IPO. The IPO is expected to be priced on Tuesday, September 15th, with public trading to begin on Wednesday the 16th. I'm sure it will be quite the spectacle on all the business news channels. So what do I personally think about this IPO? Well, I'm recording this before the IPO is officially priced, so I don't have the exact number, but assuming it is in the $100 to $110 range as expected, it's going to be a pricey company to buy into. Now, price isn't value, but when you look at where the company was valued at in February, which as I said earlier was at $12.4 billion, it's going to be more than tripled, and you have to ask yourself, is that new valuation warranted just 7 months later? I think this is where all of the hype in the company has helped Snowflake. As investors, we look at IPOs as successful when a company is priced and then once it starts trading, the price goes up. And that is good for investors, but for the company, while it is good from a perception point of view in that it shows people want their stock, they also realize that they actually left money on the table. I'll use an example to help clarify what I'm saying. Let's say a company is priced at their IPO at $20, where 100 million shares are sold to the institutional investors and banks, resulting in them having raised $2 billion. And then trading starts and the stock closes at $40. Again, that's great for investors, but the company, who already sold the shares at $20, could have had an additional $2 billion had the underwriters priced the company at $40, the price that it would have been able to get on the market. It's one of the reasons some companies, usually ones that already have good funding, will decide to do a direct listing versus a traditional IPO. And now that the rules have changed with direct listings being able to raise money, we might start to see more of them. Time will tell. Okay, so why am I bringing this up? Well, I feel when it comes to this IPO, Snowflake has some leverage in the pricing due to the massive amount of hype out there. And then when you announce Berkshire Hathaway is interested and willing to pay at the midpoint of the proposed range, I'm sure in consultation with their lead underwriters, Goldman Sachs, they determined that they could price it at a point to make money at a level where they won't feel shortchanged like in the example I just gave, and yet still generate positive publicity for investors. Although there is no doubt that the retail investor crowd was disappointed at the proposed price range, and I can tell that just from comments on this channel that some of the enthusiasm has been dampened. But since most retail investors aren't able to get in at the IPO price anyway, even if it was set for $40, it could have tripled right out of the gate. It will be interesting what happens at the actual IPO pricing to see what the actual price ends up being and then where it opens as well as it ends on that first day of trading. While I would like to see the company start to reduce its losses more substantially in the coming year, the fact that they are still fairly young in their development and having major growth in a market that is still growing are all major pluses for me. Aside from the operational losses, the other significant caution area to consider is competition. And Snowflake has some with big names: AWS Redshift, Google BigQuery, and Microsoft Synapse. The interesting dynamic to me is that while Snowflake competes with the big names, it is also a customer to them, because as I mentioned earlier, their platform runs on the clouds built from those same companies. So from a business risk perspective, those companies could decide to charge Snowflake higher amounts in order for them to be able to undercut the company and price their own data cloud services cheaper. Now, there's no indication that will happen anytime soon, but it is a possibility. However, knowing that Amazon, Microsoft, and Google don't have a monopoly on the cloud because of each other being there, they're probably not going to price them in a way that would drive Snowflake to one of the other two companies. As I've said before in another video, Snowflake needs to hope those big three companies continue to act more like partners than as competitors. At this time, this dynamic of being customers of their competitors along with the operating losses wouldn't stop me from buying the company. The recent revenue growth performance and prognosis for further growth is very enticing and supersedes those concerns for me. The one thing that could stop me is the price that I can get it for. No matter what the IPO is priced at, it's hard to say what the stock will go for once it hits the market. With the proposed pricing range and how that will drive up the valuation from where it was just 6 or 7 months ago, make no mistake, this IPO is pricey. So there are two thoughts on this. One is that if I or you believe in Snowflake long term and we're willing to hold it long term, then it might make sense to buy it at a premium. However, how much of a premium is the question? A little premium could still make sense in the long run. A huge premium, maybe not so much. The other thought is to only pay what you believe it's worth right now, and that can be tricky for this company because of not only the hype, but we don't have the more stringent reporting of financial data that is required of public companies as of yet. However, more than likely, if you take this approach, you will not buy in because it will be hard to justify whatever price it will trade at. Now, anyone that's watched me for a while knows I won't tell you what to do or what I expect the price to be, since I don't have the ability to predict the future. If I was born with that talent, I would definitely share that information with my community. The most I strive to do for you is to pull in the information and try to share it with you in an easy to understand manner, and share some of my own personal thoughts on it and hope that you find value in that. At the end of the day, I always trust you to know what's best for you to do with your money based on your personal thoughts and situation. Now we wait to see where it's priced and where it trades. Again, let me know in the comments what price you think it will close at the end of that first day of trading. I'm sure we'll be talking more about how Snowflake stock performed out of the gate. Anyway, I hope you enjoyed the video and found it helpful, and if you did, please push that like button and share with your friends and on any of your social media sites and forums you're on. It's really important and is a way for you to help me grow the channel, and the more it grows, the more resources I'll put towards it. I already have a few ideas for that. And again, if you're new to the channel or just an occasional visitor, I hope I won you over and you decide to subscribe and join the community. We'd love to have you on board. With that, thank you for watching, and until next time, have a great day.